We've seen many pandemic success stories unravel this year, not just among countries, but even in the corporate world. The latest victim seems to be Netflix. Last year was an absolute bonus for them. People were stuck at home, they couldn't go out for movies or concerts, so entertainment had to come home. Enter Netflix. They were on a roll last year, adding 15.8 million new customers in the first quarter of 2020. This momentum continued through the year, but 2021 is a whole new challenge. We are emerging from the pandemic. Most of the world is. Cinema halls are reopening and entertainment has gone virtual. So the world does not need a Netflix subscription to keep busy. The numbers reflect this. Netflix added 3.98 million customers in the first quarter of 2021, 3.98 million. And this might sound impressive, but guess what their target was? 6 million. So Netflix fell short by more than 30%. And we all know what happens when a company underperforms. Their shares tank. Netflix plunged 13% in Tuesday's trade. Their investors lost a lot of money. And the future does not look any better. The company is expecting just 1 million new users in the next quarter. But analysts are expecting more than 4 million. So we could be looking at another quarter of underperformance. But what exactly happened to Netflix? Where did things go wrong? You see, Netflix discovered that the pandemic is a double-edged sword. During lockdowns, they made money. Now that the lockdowns are over, they're losing money. Businesses that bank on disruptions rarely survive those events, and Netflix is a prime example. The market has also changed a lot since last year. Video streaming is not a monopoly anymore. There are new players, and they're coming up with bold new ideas. You probably know what I'm talking about, the likes of, say, HBO Max or Disney Plus. Their shows are quite different from Netflix, and the audience is split. Disney Plus has raked up 100 million subscribers. Netflix stands at 207 million. So is it time to write them off? Well, not yet. Every time Netflix faces a crisis, they have one go-to strategy: produce more content. Because ultimately, that's what the business is about: content, good content. Netflix plans to spend $17 billion on new shows this year, $17 billion. Last year, they spent just $12.5 billion. Most of these new shows target the global audience. Because you see, America is a saturated market. But in Europe and Asia, there is still scope. So regional content is the mantra for Netflix this year. But this is not a guarantee of success, because messing up regional content can be a one-way ticket out of the market. So this is essentially a gamble for Netflix, and a big one at that. But here's the larger story. Will companies that profited from the pandemic extend their dream run? And I can think of a few ones. Zoom video calling, food delivery apps, even liquor companies. There was massive demand for these in 2020. But remember, 2020 was an aberration, not the norm. So as and when we emerge from this pandemic, fortunes will reverse. When employees return to work, Zoom will feel the pinch. When the curfews are lifted, delivery apps will suffer. Most of our consumption patterns will return to normal, even if it's a new normal. This will be a new challenge for these pandemic success stories. So what's the takeaway here? A sustainable business model is based on flexibility. It may thrive on disruptions, but it should always also survive once the disruption fizzles out. Country or company, far-sightedness is the key to beating this pandemic. WION is now available in your country. Download the app now and get all the news on the move.